Hey, what's going on? Scott Taylor with San Diego Real Estate Hunter.com. In this video, why don't we talk about the San Diego 3.5% down FHA mortgage loan for a few reasons. It allows a lower down payment. It allows a higher debt to income ratio. It allows a little bit lower credit score. So if you want to find out how you can buy in San Diego, let's continue on. So why don't we just dive into some of the basics regarding the loan itself. Let's go over some questions and answers, and then of course how you can begin. Number one, so for the FHA mortgage loan, the down payment needed, or the minimum down payment needed, is 3.5%. And if you look below this video, I ran out some numbers, but if you do your sales price times 0.035 equals a number, okay? So 300,000, you're looking at about 10,500. 400,000, you're looking at about $14,000 down. 500,000, you're looking at about 17,500. 600,000, you're looking at about 21,000, and 700,000, you're looking at about 24,500. So once again, whatever your purchase price is times 0.035 equals your minimum needed for your down payment, or 3.5%. All right, let's go on to the next one. So the maximum loan amount that you can get on a one bedroom is right above $700,500. The maximum for a 2-unit is $898,000. The maximum for a 3-unit is $1,085,000, and the maximum for a 4-unit is $1.35 million. Let's take a look at the maximum debt to income ratios. So just a little backtrack here. So we add up your minimum monthly debts that are going to show up on your credit report, plus your future housing payment is your total debt, divided by your average gross income is your debt to income ratio. The great thing about the FHA loan is your max housing payment that I've ever seen is 46.99%, and the max debt to income ratio that I've ever seen is 56.99%. So what does that mean, Scott? It means that the maximum, your total debt, what's on your credit report, plus your future housing payment, depending on your credit score, can be about 56.99% of your total income. So let's just say you can go up to $5,699 per month in total debts if your gross income is $10,000 per month. See how that works? Debt to income ratio. Okay, cool. So this is perfect for anybody that has a job or full-time business for 2 years or longer. And it's not just limited to first-time home buyers or those with limited income or those with less than perfect credit, or has nothing to do with any of that kind of stuff. Anybody can do it. If you have a full-time job or business for 2 years or longer, this is perfect for anybody that wants to put down a little bit less and allows higher debt to income ratio. Okay, so this is awesome for anybody that wants to actually live in your home as a primary resident. So doesn't work for a second home, doesn't work for a vacation home, doesn't work for an investment property, just something that you're actually going to live in. This works for anything that's livable. So it's a livable home, just a regular home that you can live in. What's known as a PUD, or planned urban development. Those are a little bit more popular in Temecula, but it's just the actual legal ease of the place that you have. A townhome or condo, and look below the video, there's a link to it. It can be a townhome or condo, but it has to be an FHA approved townhome or condo complex, okay? And you can just Google FHA approved condos as an easy way to find if it works, or look below this video. Or of course, it can be a livable 2, 3, or 4 unit. So a duplex, triplex, or fourplex. Okay, something cool about the down payment, maybe I should have put that above there, but something cool about the down payment is 100% of it can come as gift funds from parents or another relative or an employer or a charity group or a government homebuyer program. So even though you have to put down 3.5%, it doesn't necessarily have to come from you. It could come from a parent, from a relative, from charity, from work, from a down payment assistance program, which I'll get to a little bit more in a second. So let's talk about credit scores. So being approved with something around 40 different wholesale lenders in the state of California, I have a lot of different options to where I can take your FHA loan, okay? But I have lenders credit score wise that will go as low as a 500. So when we pull your credit, whatever your middle credit score is a credit score that we go off of. Okay, cool. So let's talk about some of the waiting periods on an FHA loan. So if you had a Chapter 7, it's 2 years from your discharge date. It's 3 years for foreclosure and 3 years for short sale. And by the way, those are shorter time frames, obviously, than if you go with a conventional loan. Okay, so why don't we dive into some typical questions and answers that I personally get on a daily, weekly, and monthly basis regarding the FHA loan. So, can I use the FHA loan in conjunction with one of your down payment assistance programs? Yes, this is exactly how this works. A down payment assistance program works we have the down payment assistance portion for your 3.5% down for an FHA loan. Then you have your FHA loan for your actual loan that equals to 100% financing. So yes, if you do not have a down payment for the FHA loan, and we qualify going with one of my top down payment assistance programs, you definitely can use that for your down payment. So another question. Hey, Scott, if I've had an FHA loan before, can I get one again? Yes, of course. So this is not any kind of special down payment assistance program. In FHA or first-time homebuyer program, in FHA loan, it's just a regular loan. FHA, conventional, VA, USDA, a jumbo, etc. So an FHA loan is like any other loan. You can have one at a time because you're living in it, right? And you can have your condo FHA approved. You sell it. You buy a home. It's FHA loan, etc., etc. So yeah, you can rinse and repeat the FHA loan as much as you want. Just keep in mind it's for a primary residence, not for a second home, vacation home, investment property, etc. Okay, here's another very, very popular one. Hey, Scott, why would I go with an FHA loan over a conventional loan? And that's a great question. So with the FHA loan, we get a much higher debt to income ratio, potentially up to about 57% for the FHA loan. Conventional is about 45-50%. A lower credit score allowed. I go as low as a 500 for FHA. Conventional is usually around 620, 640. There's a lower down payment needed at above the conforming loan limit. So with an FHA loan, it's 3.5% down up to $700,000 loan amount. Conventional, it's only 3% down up to $510,000 loan amount. So at the FHA, you get an extra almost couple $100,000 difference in a sales price with only 3.5% down. And then lastly on that, for the FHA loan, it's a little bit easier to get qualifying wise than a conventional loan. Okay. And then on the flip side, okay, cool, Scott, we get that there's positives. So what are some of the negatives for an FHA loan? So here's some negatives that I see. So when you get a conventional loan, you don't pay an upfront mortgage insurance premium. With an FHA loan, you do. So conventional loan, you don't. FHA loan, you do. It's 1.75%. That's one. With a conventional loan, if you're getting a condo or townhome, it can be in any condo or townhome complex. With an FHA loan, if you're getting a condo or townhome, it has to be an FHA approved condo or townhome complex. Once again, just Google FHA approved condos, townhomes. A link will come up and you could search, or just look below this video. There will be a link that you can go to that. And then finally, for an FHA loan, don't forget it's owner occupied properties only. Conventional loan, you can do it on second home, vacation home, investment properties. FHA loan is just for something that you actually live in. Okay, here's another great question. Hey, Scott, and the last question that we'll do here. Hey, Scott, if I have just enough for the down payment, is there any way that I can get my closing costs covered? Yes. So let's just assume you're going straight FHA. You have 3.5% down, and you scrape that out, and you have nothing less for closing costs. What do? I represent you for the real estate. I represent you for the loan. When we write your offer, let's say your name is Bill. When we write your offer, we say, hey, seller, we'd like for you guys to pay X% of Bill's closing costs. That's one way. Of course, the seller could say yes, no, or counter a different number, but having the seller pay closing costs. Okay. A second way is called a lender rebate. So let's assume that we do your FHA loan. You get approved for a rate. I'm making one up. 4%. Okay. We would do your loan at 4.5%. There's a difference of 0.5%. That 0.5%, you get money on the back end. That money on the back end, called a lender rebate or lender credit, we use towards your closing cost. Or obviously the third option, if you don't have any money and we can't get closing cost assistance because we're going straight FHA, the third option, we have seller, we have lender rebate, is a combination of both. So what's something that's very common is the seller might pick up a little bit, the lender rebate might pick up a little bit, put those together. That covers all your closing costs. Okay, cool. So now let's talk about steps to begin. Number one, go to my main website, SanDiegoRealestateHunter.com. Maybe look below this video for a red link. And go to ScottsLoanApp.com. You can apply in 15 minutes or less on my application. Step number two, log back in. Just make sure your application is complete. Then you can upload your needed supporting documents. It's very, very simple. Just a latest copy of your driver's license. Just take one with your smartphone. Last 30 days paychecks. I'm assuming your work emails those to you via PDF. We see the last 30 days. Last 2 months bank statements, all pages. Wherever you have a bank account, just log in online, say the last 2 months. If you have anything like stocks, bonds, mutual funds, 401k, retirement, etc., we see the latest statements. Just log in online, get those, just the latest statements. And then finally, last 2 years tax returns and W-2s. If you don't have those, just Google IRS tax transcripts. You can get them completely free from the IRS website. Online, or look below this video again. I will link out to that as well. So once you've filled out the application, once you've uploaded your supporting documents, I'll check to make sure it's even a possibility. Third step is I will run your credit. We'll know what your debts are. We will know what your minimum middle credit score is. We'll add in a future housing payment. We'll divide that by your average gross income, and boom, I'm gonna know exactly where you stand and how much we can get you approved for an FHA loan. Of course, if you have any questions whatsoever, shoot me a call, email, or text, and I look forward to chatting with you sometime soon.